Supermicro is right at the heart of the AI hardware boom. So when their latest earnings report dropped, well, let's just say everyone was watching. At first, the headlines screamed miss, but the real story here is way more interesting and honestly a lot more bullish. So let's get into it.
Okay, so let's set the stage. On the surface, the Q1 numbers really did look like a major misstep. I mean, for a stock that's been on an absolute rocket ship, any sign of a slowdown sends shockwaves. And that's exactly what it looked like was happening. So this is the number that really got everyone talking. Supermicro told the world to expect revenue between $6 and $7 billion. What they delivered was $5 billion. That's not just a little miss, that's a huge shortfall against their own forecast, and it immediately set off all kinds of alarm bells. And it was pretty much the same story with earnings per share. It also came in below what they guided for. So you're looking at a miss on revenue and a miss on earnings. And the obvious question is, what in the world went wrong? Did the AI party just come to a screeching halt for one of its key players?
But, and this is a big but, this is where the plot thickens. That $1.5 billion gap, it wasn't a sign of weakness, not at all. It was actually a sign of something way more powerful going on under the hood. So the CEO, Charles Lang, comes out and basically says the revenue wasn't lost, it was just delayed. Think about that. A huge customer didn't cancel their order, they actually came back and asked for more. They wanted more complex, more powerful, upgraded systems, which just took more time to build and test.
Let's break that down, because it's important. We're not talking about simple computers here. These are monster GPU racks, the absolute workhorses powering generative AI. So when a customer comes in at the last minute and says, hey, can you make these even more powerful and also give us more of them? Well, that takes extra time. The key here is this was a delay caused by good news, overwhelming and sophisticated customer demand.
So let's peel back the layers here, look right past that headline miss, and see what was really happening. Because the real story isn't about a revenue shift, it's about a demand pipeline that is, well, just completely off the charts.
In the very same quarter they seemed to miss, Supermicro booked over $13 billion in new orders. Just let that sink in for a second. The demand for their stuff isn't just strong, it's accelerating like a freight train.
And get this, buried inside that $13 billion is the single biggest deal they have ever signed in their entire 32-year history. This is not a company that's stumbling, this is a company that's sprinting to keep up with absolutely historic levels of growth. And just in case you were wondering where all this is coming from, look at this. A full 75%, 3/4 of their revenue came directly from AI GPU platforms. They are planted squarely at the epicenter of this whole AI revolution.
So how on earth does a company even begin to manage this kind of demand? Well, the answer is in their core strategy, their secret sauce, something they call the building block approach. And it's their blueprint for everything they're doing right now.
All right, so this is the real game changer for them. Supermicro is moving beyond just selling servers. Now they're delivering entire pre-configured plug-and-play AI data centers. It's like they're selling an AI factory in a box, designed to get their customers up and running way faster than anyone else. And you can really see how they've been building up to this for years. They started with components, then moved to servers, then to full-rack solutions, and now they're at what they call SMCI 4.0. These complete data center building block solutions. It's an evolution that's been decades in the making.
And believe me, when they say total solution, they are not kidding. We're talking servers, storage, the super important liquid cooling systems you need for these powerful chips, power, networking, software, the whole shebang. It truly is a one-stop shop for building an AI factory.
Okay, so you can't just promise this stuff, right? You have to actually build it. And that means you need a massive global manufacturing footprint, which is exactly what Supermicro is building right now at a crazy pace.
Their home base is still in Silicon Valley, but look at this. They are aggressively expanding everywhere. They've got new, huge facilities online in Taiwan, the Netherlands, and Malaysia, and another big one planned for the Middle East. They're building out this global network to ramp up capacity and get closer to their customers all around the world.
And they put a number on it, a big one. The goal is to have the capacity to produce 6,000 racks every single month by the end of this fiscal year. And this is the crucial part. Half of those, 3,000 a month, will be the advanced liquid-cooled systems that the most powerful AI chips absolutely need to run.
So let's bring it all together.
We have a revenue miss that was actually caused by too much demand. We have a massive new order book, and we have a global expansion to meet that demand. What does all that mean for what's coming next?
And boom, this is where it all comes together. After that $5 billion quarter, they are guiding for a jaw-dropping $10.5 billion for the next quarter. They are literally forecasting they will more than double their revenue from one quarter to the next. That $1.5 billion that shifted, it's helping fuel what's about to be a record-breaking Q2.
And they're so confident they're not stopping there. They're raising their guidance for the whole fiscal year. They've gone from saying at least $33 billion to now at least $36 billion. That is a massive signal of confidence in their pipeline and their ability to deliver.
Now, the CEO is realistic, right? He knows the competition is fierce, but their strategy is crystal clear. Right now, it's all about one thing: market share. They are willing to invest like crazy, maybe even take a hit on margins in the short term, to lock in their position as a dominant player for the long haul.
So at the end of the day, it really boils down to this. Supermicro is making a huge, calculated bet. They're trading a bit of short-term profit for what they believe will be long-term market dominance. And the big question for all of us watching is, are we watching them level up into a true data center giant right before our very eyes? I guess we'll find out next quarter.